All right, well, today was the day that broke the all-time high streak that we've had on the S&P 500. 328, I believe, is the number that we saw. The number of all-time highs we've had since, well, I guess it would be since that 2009 pullback, but we didn't start getting them until later. The previous streak in the late night from pretty much all of the 90s was 327. I think we've had in the 80s up to the October 87, we had 121, 171 in the 60s. So 328, that's a big number. I mean, it was a big number to get to 327. We're also really darn close to 40 on the CAPE ratio, which we hadn't seen since that peak in 2000. So we keep marching. The ants keep marching here with small moves, grinding moves today. How bullish? I mean, there's a lot of chatter about the Russell breaking out. So we're going to really dissect that breakout and see, well, okay, what can we expect now that we are breaking through, and what are we breaking out of? And so we're going to take a look at that really closely. What's really driving this bullishness over the past week, and then did we carry through with that today, and why not? And what dropped today and why? So we're going to take a look at that. And then our trade idea is a stock that it's kind of looking like the Russell 2000 itself. So so what do we do with it? And can that tell us more about the type of strategy we should be looking at going into September, October expiration? So let's go ahead and get started. Today is Monday, August the 30th, 2021. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, well, let's start off taking a look at the S&P 500 with the market forecast indicator. As you can see, we got the green tag, a yearly high today, so another high. In fact, I believe, if I remember correctly, seeing Charlie Biello's tweet that this is the record now. Like this surpasses the number of new all-time highs that we got during the the 89 to 2000 run. So very good rally, obviously over the course of since 2009 essentially. Of course, we didn't start getting 52-week highs until more like 2013-14 area, but since then we've been on a good 6-7 year run of consistent new highs. You also notice we came really darn close to a cluster. If you look at the momentum line over here, I mean, we are 1/100th of a point away from a cluster. I mean, that's about as close as you could possibly be to one and not actually having one. I mean, if we were to close just a 1/100th of a point higher, I think if we would have been at 52, 45, 28, 80, we probably would have had it. But we didn't. The NASDAQ did, however. It's a lot of the large cap names are driving. You can see it did have a cluster. We are 3 3.33% above the 30-day moving average. A good strong move to the upside. You can see a good directional move going on too in the NASDAQ. Up above 30, now below 20. So finally a good directional breakout move on the Qs that we haven't seen for a while. If you take a look at SPY, same, not quite there, but close, above 30, but not below 20 yet. So still remember, this is a very significantly low ADX. Very significantly low. Not as low on the Qs. And of course, IWM, interestingly enough, IWM hasn't even been that low. So IWM hasn't been nearly as sideways as the S&P has been, according, again, to at least non-directional, according to what the ADX has been. So kind of interesting patterns that we're seeing. Of course, if you look at the Russell 2000, its intermediate line crossed up above 80 here. Today crossed above 80 here today. Came close yesterday or Friday. Did cross above 80 today. The momentum line also, near-term line also crossed above 80. The momentum line did not, but still was above 70. You still have a sideways market sentiment, so we're still kind of, we're not necessarily breaking out here, right? I mean, it's a good bullish move. But a lot of people have talked about how we're breaking out of a sideways, this sideways action on the Russell. And it's like, does that look like we're breaking out of a sideways action? I mean, now granted, it's dark green shading the green line, but you notice we've had that over here. We were in bullish territory over here, not with a green line. We were bullish territory over here for a while. Market sentiment even got above 60, but we didn't break out of the sideways channel there. And of course, you had some bearish moves that didn't break out of the sideways channel. So it's kind of interesting that we're latching so much. I mean, that's a great breakout move on Friday, but we're latching so hard onto the Russell breaking through that, you know, if you step back just a smidgen, I mean, all you have to do is step back just to the last 7 months, 6 months. Doesn't look like we're breaking out at all. So, you know, just kind of be a little wary about, you know, how, you know, by backing up the trucks too much, right? If you notice again, SPX still hasn't had. I mean, we're almost 10 months now into this run, almost to the 10-month completion mark. Again, we've seen 12 months. There was this tweet. Here we go. This is talking about the number of highs that we've had through the month of August. The first time we've ever been above 52. We've had a 51. We've had a 52. This year now is finally 53. Again, you can count up all these new highs and kind of get into. Again, this is only through August. But if you take a look at this one, this is interesting. So this talks about 7-month-long monthly streaks. And you can see, you know, it doesn't necessarily lead to a strong month afterwards. And you can kind of see some of these periods. We got 2009 in here. We got 2013, 2017. We've talked about this period kind of being very similar to 2017 and 2013. And you can see some strong 1-year returns and 6-month returns coming out of this up almost every time 6 months later. So this is kind of interesting. If you take a look at the October 2017, that's when we were on our 7-month streak, right? That was the 7th month that we were higher. But let's come over here and let's take a look at that period of time. Again, you can see how bullish we've been, right? Very, very bullish. Let's come over here to 2017. And so going into October, like this is the end of October right here. So that would have been our 7th month that we would have been bullish. So let's come over here to the beginning up through the end of October. So this right here would have been our 7th month from the course of the year. Now you notice the intermediate line had popped down twice. We had a intermediate pullback here in April. We had an intermediate pullback there in August. We had just started a new intermediate run. Now it wasn't very much of one, right? Keep that in mind. If you look at like the amount of retracement that we had, we did get below the 23% retracement level. We did touch the 38% line. We just didn't have very long. We didn't have a very long stretch of dark pink shading and a red line. Not even like that one over here. But we did get the intermediate line down below 40 into bearish territory. Hence bearish intermediate decline. Definitely got below the 23% line, which is something you also look for among other things. And then you got the cluster coming out of it. And so this finished that 7 month in a row. So we had 7 months from March. Really, it would be what, April. So it would start off with April. So you have March, which is probably a down month there. And then you start off with April. So we go from 23.59.73, 23.59.73 to 23.84.20. So there's our first up month coming off of this. And again, like I said, intermediate, like we had the near-term line drop below 50 there, but not quite in the bearish territory. Then we got the intermediate pullback, and then we had this run. And you can see what happened after that was we had, you know, we went parabolic. But remember, we were just starting an intermediate run. We were only about a month and a half into a new intermediate run that had clusters to really kind of break us out, to like really get us going. As soon as that intermediate line got above 80, we got a cluster. So it's a little different environment than what we're seeing now, when we're already like we haven't had a 10-month long intermediate run. And you can see 3 months later we were up almost 10%. Before then, after that big rally, we had that move, right? So that's 2017. Now 2013 is a little different story. If I were to come over here to that one was May of 2013. That was the 7th month for that one. So let's go back over here to 10 years. And we'll come over here to, it's the end of 2012. So it'd be through November and December of 2012 into May of 2013. So here is October 31st at 14/12/16, and then November 30th, 14/16/18. So a little bit of small positive gain, and then you can see how we started the intermediate rally. We were coming out of intermediate pullback, and then going on into May. So this would be our 5th month, and then this is what happened. See here, where's 2013? Okay, there's November right there. So this is what happened coming out of May, right? We had, we had multiple intermediate pullbacks there, including a cluster, some volatility before we started a new intermediate run. But you kind of saw what we had going into it. We had an intermediate pullback that started it. Again, remember, we are 7 months into this one. That means that this started in January. That would be, February would be the 1st month. So it's not counting January. We finish December 31st at 37.5607 and 37. Then we finished there at 37.14. So we finished January with a down month, but was not an intermediate pullback, right? I mean, that was hardly an intermediate pullback at all. At the time that we had that quote-unquote down month, we were well established in a new intermediate rally, and then 7 months later. So it's kind of interesting that this idea that, okay, if we're going to have a 6 month long, almost double-digit rally coming after this, is that going to be the case for the S&P 500? Well, it's a little different scenario than what we have right now, because we are so bullish going into this current 7 month peak. So it's always context, right? It's the context. You look at a 7 month rally, you look at the context of the move going into that 7 month period and what you can expect to come out of it. And granted, it's very, very strong return here that's most likely going to end positive. There's your 7 month rally there, 7 month rally here, and then there's your one. Again, about as weak of a down month as you can get, because we've been on an intermediate run this entire time. You look at some other, we had a 5 month long intermediate run there, or 5 month long monthly rally there. You can see 4 months in a row there before some weakness. We had only one kind of 2 months there. See, was that? Yeah, 2 months there before you had a monthly period of weakness. You can see some periods over here of 6 months. Here, let me get rid of this. You can see over here 1, 2, 3, 4. This is 2017 going into 18. 1, 2, 3, 4. Here we go. 1, 2, 3, 4, 5, 6, 7. There's that October 2017. Of course, 3 months. 3 months later, November, December, January, and then we had 2 significant declines on that particular streak. And then, of course, 2013, which is also brought up 1, 2, 3, 4, 5, 6, 7 going into May, and you can see the period. And then we only had 4, and then we had 4 again, and you can see the up and down volatility we had as we went through tapering. Again, this is very similar because by May we had started talking about tapering. If you recall, in May of 2013, there was that taper tantrum that we had. And then we had sparks and volatility, and then it finally started to get more taper expectations by the end of the year. And we actually started in 2014. So that's kind of like, it's interesting that we are so bullish, and we're going for a 7th month, and we've been 10 months along into this. And this idea that, oh, the Russell's breaking out and here we go. But the reality is, like, how much is the Russell really breaking out here, out of this entire sideways channel, not just a little bit above the midpoint of the channel. Like, basically that's what it's done. It's broken through the midpoint of the channel. So, how likely is it that we are breaking out, and how likely are we to start a double-digit rally over the next few months? which is what that tweet suggests. And I think the likelihood is a lower probability, again, simply because of the type of move that we've had here. I mean, again, even just on this current intermediate run, of not of a 10-month long intermediate run without a 5% dip. Again, we saw this kind of in 2017, though the reality is this was an intermediate pullback there, just wasn't quite 5%. But again, you can see from this level over here, we're talking about a 30%, 38% run off of that low point up to that high point. And, look, that's where we're at right now, 38% drop without a 5%, without even close. I mean, none of this was even close to a 5% pullback. In fact, if I were to change this to a 4% pullback, so you can see it was almost 4.8%. And you can see we've had a couple 4%ers here, but just 4.25 and 4, but never quite, 5%, and not as close as even that one was over there. And they got to a 38% run. So, a lot closer on that level to be up 38%, and that's even 43. And again, you can see it's a pretty strong run. And again, I don't like to use I don't like to label 5% drops as intermediate declines, or I don't like to label intermediate declines or market sentiment declines necessarily by the percentage of a drop, like a bear market's 20%. I mean, that would mean that this was a bear market here, and that was hardly a bear market. That would mean this low point by itself was a bear market, as it was a 20% drop. And we all know that that's not the case. It was just a big, sharp drop, hardly a bear market, right? So, but again, 38% run, like we haven't, this off of 2009, off of that low point, we haven't had that big of a number. I mean, except for in 2017 that peaked in 2018, like again, off of that level of about 38%. And that's where we're at right now on this current run. And even that one going up to June was a 30% run. So, we've had some really, really strong runs, as you can see, going back to the prior bull market here, we had a 36% intermediate run, or run without a 5% dip, that ultimately peaked into some volatility, and then nothing else even close. So, so again, 10% run off of this level, where we've kind of seen how rare it is to get to even to this point as it stands. And we have to temper expectation. Can we keep going up? Yes. Do we expect the same kind of moves we saw here in 6 months? Probably not, because again, much different environment now than we had then in terms of the context of what got us to this 7-month long run compared to what got us to this 7-month long runs on these other periods. All right, let's go through some of the other charts here for SPY. Again, we talked about how we got the breakout signal on the NASDAQ. Again, you can see it's not a breakout signal yet. I mean, we're back below 30, and we're still above 20 on the negative indicators. That's not the ADX is actually falling. It's not rising on there. So still not really a breakout pattern here. SPX is bullish, and we are hardly significantly bullish on the Russell. Like, we're still not even above 60, and we're barely getting above 100. In fact, we're kind of diverging. The last peak we had was higher so far, and then the index was actually lower, higher. We have higher highs with lower highs as of right now. So, we're hardly breaking out here. So it's, it's kind of like, why do people get so worked up about things? You can see, of course, we're very, very strong trend strength on SPY, and the Qs are right back to a moderate strong trend after we had some weakness there that brought it to 0. So we're just right back there. But again, we are above the cloud. But we don't even have a weak. We're not above 1. We're not above 50, which is a weak. Means that we have just a weak directional move. So this is still telling us this is just noise, and nothing more than that so far, right? So far, Bollinger Bands, we are up across the upper band on SPY and above QQQ. In fact, we've been above the upper band for quite a while on QQQ. that's a little concerning for the Qs because we've been so bullish. Usually you see these in one of two places. You either see that we are breaking through the upper band to start a new intermediate rally, or you're breaking through the upper band to end one, right? To end one, as you can see that we ended it here, and then we had some volatility for a few months. So we're getting a lot of closes above the upper band here. It makes you wonder, are we starting a new intermediate rally? Because we actually still are on one. Or, could this be the end of one according to that? And of course, IWM, we are up in the upper quartile. But again, remember, you would like, after being noisy for so long, you would like to start a new intermediate run like we did over here with a breakout outside of the Bollinger Bands and not just barely getting into the upper quartiles, hardly significantly bearish. Let's take a look. Again, the intraday chart here. You can see SPY kind of pulling back, and again we gapped today, so another common gap, a couple of common gaps in a row that we haven't filled yet. So keep that in mind about SPY over the next couple of days. We still have this one, but these two are definitely common gaps that we didn't fill at all over this morning. And then IWM, as bullish as we were yesterday, kind of halting so far. And keep in mind that if we do fill in that gap from the last Monday, we would be a lot more bearish on small caps than we would be on SPY. This is the Qs. Remember, the Qs got the cluster. That's kind of shows just how bullish this has been. A 20-point difference now, almost 5% difference there. In fact, over 5% difference of that high point. If we take a look at the today's volume and trading range, of course, 3 green arrows across the board here, and the only one that's not giving us 3 green arrows yet is diamonds, but everything else, you got the green line and the green shading in the background. Below average volume at 48 million. The range was also below average, so keep that in mind in terms of, again, just that's not actually a bad thing, but it's not necessarily the most bullish thing either. You can see the volume, the range is way low. The average is already way low. The volume's already the average rate. In fact, the ATR to price ratio is still below 0.75, which is extremely low. Again, it's, you don't, when you get such extremes like we saw in 2018, if I were to pull this out going into, let's take a look at this going into January the 26th of 2018. So a year going into that period, 2018, sorry. So this would be January the 27th of 2017. So this is what it looked like there, and you can see we were actually at 0.68, so we are well below. We had gone below 0.5. We had been very, very extreme for so long, and we actually had been rising, and then that was the peak, right? We faltered after that. The volume was actually at the highs. Interestingly enough, the ATR was rising, the volumes were rising, we were at the highs, and then this, of course, that's when we really started to tank there. But we were coming off of some extreme lows. The extremes were below 0.4 over there, and down to just a point, and down to 50 million shares trading hands. But you have to multiply that number by the price to kind of gauge, compare that to now where we're at 56 million, but a lot higher price, almost double the price. But this is normalized and at 0.74. So, but is that an extreme compared to where it has been? And then you look at volatility, which is also at an extreme, well below 80% today. Still at 16, but well below 80%. So again, goes to show that the markets are still buying up the volatility that's 3 months out, right? That's why the VIX ratio is so low. And you notice still at 158, buying up options are still far out of the money. So they're still a lot more concerned about a big move to the downside, and not just a dip, right? Of course, since the dips are being bought up every time we get them. But if we get one of those big moves, that's why we are at 16 with volatility at an extremes. 16 is not an extreme. We're not even below 15. So that's hardly an extreme low on an absolute basis, but it just shows how high the VIX 3M is on a relative basis by pushing 16 down to such low levels here. All right, before we talk about what's driving the market today, I invite you to subscribe to our YouTube channel. Mouse over this icon here on the bottom right corner of your screen. Hit the red subscribe button that pops out. There's also one down below the video if you're watching us on YouTube. That will notify you when our videos are posted. Also, while you're down there, hit that thumbs up icon. That tells us that you liked the video today and that you want us to do another video again tomorrow. Quick way to give us feedback. Comment down there on anything that stood out to you from the video today. Join our website at marketscholars.com. There's a link popping out there in the top right corner of your screen. Click on that link to subscribe to our site for free. Follow me on Twitter for more content in between the videos from day to day. There's my handle at DavidSettle42. And join our Market Outlook Facebook group that we've created. You can also see a link to subscribe to our site up here at the top. Again, that gives you access to our free subscription. If you click on pricing, you can see what our different subscription levels are. So that gives you access to this. Our premium subscription over here on the right. This is what most of our market subscribers are, market scholars, excuse me, are. You can check us out, our monthly subscription here. You can check us out when you subscribe for free. We give you a unique offer to check us out with our plus monthly subscription model. Let's come back to the market outlook here. Click on this. Part of what you get with that monthly subscription, month-to-month subscription, is the Market Outlook Live. You can be able to watch. I review all the trades I've done in previous market outlooks to see if we should stay in them. I also put on today's trade idea already before the market closed. I did it in that video. You can see our upcoming trading rooms as well. Come down here, click on this heart. It opens up a new tab. Hit that like button. Also click on this thumbs up icon. Opens up another new tab. Hit that like button there. Again, it helps us get our content out to all of our followers. The more engagements it has, it also benefits you because Twitter and Facebook will promote content in your timelines from the accounts that you engage with the most. We try to make it really easy for you to engage with us here. You can also see over here on the right all of our charts that we use. I'm almost done updating all of my charts here, and you'll be able to see how to put them onto your Thinkorswim platform there, and then all of our sector watch lists. Again, this is available for all of our premium subscribers as well as other premium tools and access to our class forums. Let's take a look here at what's driving the price action today. So let's come over here to an asset class comparison chart there. And then just look at today. So just give me 1 second to do that. Why does that? There we go. Sorry, let's go to a smaller time frame. So the NASDAQ really took off and ended up being the big winner today, bringing the S&P up along with it. You can see IWM was the big loser. It was the only outlier to the downside. Remember, it had the biggest 6-day run, so of course it's going to pull back. Now, emerging markets and commodities also had a pretty good 6-day run, and they did not pull back as much. They lagged behind the S&P, but they did not pull back as much. Remember, the Qs, real estate, or safe haven areas right now, the Qs included. So keep that in mind, and you can see other safe havens. The gold really dropped while the dollar was just kind of flat. If you take a look at how the price pattern that gold had today, GLD, you can see after a real significant move to the upside, a little bit of a drop. So not too significant that it's like, oh my goodness, what in the world just happened? You still got dark green shape. We're still in bullish territory. We're still above 80, but we're not strongly bullish. As you notice, we're only about 1% above the moving average. You tend to get a little bit more than that when you're. I mean, last time we got above 80, we were almost 3% above the moving average. So it's not quite the strongest break above 80. Over here, when we broke above 80, we're 2.5% above the 30-day moving average. So we're only 1%. So not the strongest breakout move there. And you can see if I look at the dollar, again, the dollar has been pretty bullish, and we were kind of thinking, okay, well, it's going to start falling here, and if it breaks this line, especially the 23% line, then it's really going to be bearish. It'll make a run up. I would expect up to in this area, about to 119, but so far hasn't done that. It's kind of stalling with this bearish near-term divergence setting up. So it'll be interesting to see if the dollar, if this is the extent of the dollar's drop over the past 6 days, this kind of risk-on move that we've had. So that's the main driver. If you take a look at like how these major economies are doing, you notice we like to do that. So let's take a look at the 12 grids down. It's right here, I believe. Let's see, it's right. Yeah, this 12 grid. Nope, sorry, that's that chart. And you come down here. So here's the 12 grid for all the major, economy. Lots of dark green shading, lots of green lines. India is doing really well. Russia, Canada, UK, France, Japan, Germany, all across the board. Dark green. The only ones that aren't doing very good, but are well off of their lows at the very least, are China and Korea and Brazil, which had been previously such really good movers up until this little intermediate decline that they've been on. But some more dark green shading and green line across the board. So that's finally a little bit of a positive development that we just haven't had in those areas for so long. If you take a look at how these performed here today, let's come here to August 30th. Let's go to like a 5-minute chart. You can see India had the biggest move. Russia had the biggest move today. So very much an emerging market type day. On the flip side, which is not very bullish, is you had Korea especially being down at the bottom. Now China also started the day lower. They finished higher, still lagging behind the S&P. You can also see that, let's see what else. The Italy here started down, and then Brazil started down. So Brazil and Korea stayed down. China went up. Italy kind of matched what we're seeing in Canada and Japan. So multiple areas of the market, of the world, all lagging behind the S&P. Only India outperformed the S&P 500 among these major economies here today. If you take a look at kind of how commodities have been performing, because that's been a big difference, a big mover over the last little bit. Let's take a look at just how they did here today. And you can see again, if I were to go to a smaller time frame chart, you can see that you had some coffees doing well up here, but there is gasoline. You can see natural gas down. So it's been kind of interesting to see. You would expect natural gas to kind of outperform or outperform a little bit because of what's going on with the hurricane, as you see with crude oil and gasoline prices. But those two are obviously have been impacted a little bit more by what we're seeing in those areas. Here, let me go right here. You can see across the top here, gasoline jumping up off of their lows. Crude oil is jumping up off of their lows. Natural gas is pulling back just a little bit from its highs. But you still have silver on a bearish trend. You still have sugar and corn on bearish trends. You still have platinum on a bearish trend. Copper is on a sideways move, not really doing. It looks almost exactly like gold for that matter, and they're not necessarily both precious metals. So we're not the most bullish risk on. We're kind of thinking that this breakout on Russell might be breaking risk out, and it doesn't look on this chart like risk is necessarily breaking out. And then finally, let's take a look at how these sectors have. Well, let's look at the currencies for 1 second here. So let me bring that up. We'll go here, and then again, just look at today alone, because you can see, Japan, France, the U.S. dollar, all being the big winners over the past 3 months, which is a risk-off type move. But if we go to just today alone, you can see that the dollar was actually kind of down. The dollar outperformed the euro, the pound, the Australian dollar, the yen. So other major currencies, the franc, the dollar outperformed all of those, but came in behind some of these that are more correlated with commodities. Norwegian, Singapore, Mexico, Swedish krona, New Zealand. New Zealand's kind of more softer commodities. Singapore dollar, lagging behind all these areas. South African rand, kind of more associated with gold prices. So it's kind of interesting that the dollar outpaced these other major currencies, but lagged behind some of these kind of commodity-based currencies. Now let's take a look at the sector trends. So that's going to be right here. We'll go sector performance, and let's just go again just to today, August. There's your real estate and XLK doing very well. XLY, XLC doing well as, again. But look at energy and financials again. They were weak. They had a good 6-day run because they were so weak, and now they're pulling back. So again, if I go all the way back to July the 2nd, when this kind of risk-off move started, we'll go to like an hour chart. Again, they were down. They've rallied, and then now you can see energy is still down there, even since this weakness that we've had that kind of petered out here, and then we had that nice little run coming off of these lows, but energy is still way down there. Financials is back to lagging again. What was going on here? You can see industrial still lagging behind, materials lagging behind too. So these cyclical areas that had been lagging the markets, consumer discretionary, are all still lagging the markets, while your safe haven areas outside of staples are all still outperforming the markets to a pretty good degree up here to the top. So again, not necessarily like a breakout in risk appetite here. So if we're not bullish, but we're not necessarily expecting a bullish directional move, but we're also not getting a bearish directional move either, then how do we trade? Well, we go for the sideways trades, like FCX, which had been relatively bearish. You can see the intermediate line had been below 40. It's turned back around. It's back. It's not above 60. We're hardly above the moving average, but it is at least above 50. Again, we got dark green shading and a green line, so it's got a little bit of a bullish bias. You can see it's stochastic, RSI and CCI are in neutral territories. Its directional movement index is showing a lack of a directional move, as both lines are up and the ADX is falling. If you take a look at the Bollinger Bands for FCX, we are in the middle of the band width, right near its point of control, right in the middle of its value area for the past year. And then you look at like its Ichimoku trend cloud, and we're not getting, we are below, we're above 1, we're above 65 actually, so we're almost to a intermediate trend, but not quite there yet, and we're actually in the cloud. So I wouldn't actually be surprised if this broke down as quickly as tomorrow, as early as tomorrow. So and then if you look at like the 3 green arrow chart here, it's on a nice little bullish, like we did get up above here on Friday, all the moving averages except for the 200. We bounced off the 200. We got back up above all of them, 8, 17, 30, and 50, and we're still above it. But you notice we are not following through, and we're not getting through this volume node here. And we're not, these lines aren't crossing up above. The MACD is actually still negative, even though it has a positive histogram, and stochastics isn't quite in its bullish territory yet either. So it's leaning bullish, but not quite bullish. So that sets us up for doing an iron condor type spread. So what that is I'm going to sell a put spread, selling the 33, buying the 30. So going $3 wide here. There's a reason why I'm doing that, as you'll see in a second. But I'm going to sell low 20s on the delta. I'll come to a similar delta on the bullish, the call side, and sell the 42. But you notice here I can't go $2 wide because there's no 44, so I'll have to sell the 45. And that's why I went, because I have to go $3 wide on the call side, that's why I went $3 wide on the put side. Otherwise, I just normally just go $2 wide. I think we ended up getting 79 cents out of it. This is what it looks like here. Let's see, why is it not showing there? There it is. So there's what we got out of it. So a full position size, because you have earnings coming out after October expiration. And you can see those break evens where they're at here. They're right here in this area, right around the 23% retracement line of this big bullish move that we had, that we've been consolidating. But you notice we've consolidated right into this in the middle of the value area for the 1 year, and right around the biggest volume, by far the biggest volume node, and the point of control. And so we're kind of stuck here, and all these charts are showing that we're kind of getting more direction less than we are going more directional, and that sets us up for the trade. So as long as we stay between these blue lines, which is where our break evens are, the lower blue line you can see multiple touches, the upper blue line is up, you've got that volume node right there. You've got some of these highs that can hold, as well as the top of the value area. So as long as we stay here in the middle, centered around that volume node, then that's how we make our 395 bucks for the risk that we're taking. We're not going to lose 1100, hopefully. We'll get out of this trade. If it goes up too far or down too far, we'll get out when we've lost $395, and then that will allow us to live to make another trade. Alright, well that does it for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen that takes you to our Market Outlook forums. Open up any new thread there with any questions or comments you have about today's video. Reply to anybody else's thread. Let's keep this conversation going in between videos. As always, thank you very much for watching. Remember to subscribe to our YouTube channel as well as to our website at marketscholars.com. Click that thumbs up icon. Like us on Twitter and Facebook as well. Comment on the video. Have a great rest of your Monday night, everybody, and we'll see you all next time.